Hey guys, welcome back to another video. This particular lecture is very important, especially to ICT traders. So I believe if you are watching this video, you are probably an ICT trader, and I've seen some things from my students on Telegram, and I'm in so many communities, so many ICT communities on Twitter, and I've seen many mistakes, common mistakes that people do in their trading journey. One thing you should know is that I know this might sound absurd, but people are very impatient and very lazy to learn. When you go to ICT's channel and you want to learn ICT concepts, you go to the 222 mentorship. The first few episodes talks about price and time theory. Now, price and time theory, I'm not going to say it doesn't work or thereabout. Price and time theory works just fine, but there are other factors to consider in order for price and time theory to work fine for you. And I'm going to be listing those mistakes. I'm going to be showing you in this video. Okay, so stay tuned. Now, what many people do is, even my own lecture here, the first few episodes on this channel, if you check the playlist, I have a course here on this YouTube channel, and the first few episodes talks about price and time theory. Now, people just pick that particular lecture, run away with it, and start using it without continuing further, following the episodes to the end. Because price and time theory is very simple and straightforward, that's what you want to do. But there are many things you need to consider, many factors you need to consider when using price and time theory. So I've seen a lot of ICT traders do this mistake over and over again, and at some point in a bad market condition, when it flips against them, they end up blaming the strategy. They don't take responsibility. Okay, so forgive me for that 2 minutes. Let's go into the topic. Now, these are factors to note. If you're an ICT trader, you need to note these factors. Higher time frame narrative is essential. Many, many ICT traders don't even look at their daily time frame or thereabouts. They don't even do anything with those higher time frames. But you should know that higher time frame narrative is essential. If you've not studied daily bias, then you should go and start studying it now, right? To find out where price is coming from and check for any possible draw on liquidity where price should go. This is one thing you want to check when you open for a new day. You want to see where is price coming from before that new day starts. Where is price coming from? Now, what you want to figure out is where price is likely to go. Now, if you don't know how to figure out this, you need to go and study draw on liquidity, study liquidities. Go to ICT's channel, or you can start from my channel here, episode 1. It will help you. Okay. Another thing is, don't be fixated on the time and price theory. There are many traders, many of my students I know, who are fixated on this price and time theory. They don't want to do anything with price. Just come exactly that 8:30 or 9:30 and wait for a fake move so that they can pick their entry. There are many traders who does this. Now, you might be doing this because your schedules are tight or anything, but you need to understand the higher time frame narrative first. It's essential. Now, the last thing you want to do is check what the previous day did first. So if today is Wednesday, you want to check out what Tuesday did first. If today is Thursday, you want to check out what Wednesday did first. When you see Wednesday price action, it's a continuation. Thursday is going to be the continuation of what Wednesday is doing. So when you see what Wednesday did, where it's coming from, and where you figure out where Thursday is likely to go to, that's just it. Now let's look at some examples, right? All right. So this first example, I want you to take a look at this price action, right? This vertical line, I don't know if you can see that, but this vertical line, that's the beginning of the new day. You can see 12 a.m. That's the beginning of this new day. First, we have the Asian session before London, before New York. Then we have this lower time frame. Okay, we have London session first, which dropped this relative equal low. You can see that. I'm practically doing what many ICT traders do. Okay, this might not be what you do, but this is what many people do. I've seen it in different communities. Now, once a new day opens, it drops this relative equal low. That's liquidity is supposed to be taken out, right? That low is expected to be taken out, right? And we have price dropped around 8:30. This is price and time theory, okay? So all of this is London session. Then 8:30 New York opens. 9:30 that's equity opens. That's when volatility comes in. At that time, 9:30, there's a lot of volatility in the market. It just comes in. You rush to one direction first, which is a fake move, then goes the opposite. Now from 8:30, you think that what you think or what you know is that price taking this low out, right? Taking this relatively equal low is a fake move. This is what many people do. Yes, it's a fake move normally. It's no doubt. Of course, this works, but if you don't understand the bias, where is price likely to run into? Is there any drawn liquidity beneath? Before you do this, then you likely get wrecked. Because this is what many people do. And when they do these things, they'll blame it on the person they learn from. I've taught you about this, but if you don't continue the episodes further, you will not understand bias, you will not understand drawn liquidity, and so forth. This is the fake move. Price taking out this low, then gives what the OT. This is a classic OT on the 5 minute time frame. Price stripping liquidity and taking out a high, breaking this high is indicating that price wants to go higher, right? And this is the fair value gap. So you just want price to trade into this fair value gap. You pick your entry to buy. But let's see what price does. You can see this. This is supposed to be your entry, but price thrusts into that level, breaking it entirely. At this point, you'll be asking, why is it that price and theory doesn't work? No, it works just fine. Only you don't know how to use it. You don't know your bias. You're not checking the higher time frame. What is the higher time frame telling you? Because whatever the higher time frame is doing, see it like this: the daily time frame, the weekly time frame. If you know where the weekly time frame is likely to go to, you just come to the lower time frame and pick entries. But if you're on the lower time frame for too long, you get deceived because there are a lot of invalid moves that happens on the lower time frame. Lots of. So if you're not paying attention to the higher time frame, you get deceived many times. New York session, price swept this low. That's a fake move. 9:30 fake move, 8:30 fake move, whatever you want to call it, and leaves this fair value gap here. That fair value gap could be your entry, and price does not even give you any chance to break even. It just breaks through. This is the mistake you do. Now let's look at the bigger picture of this price action and see what price did, why price went through that level. Okay, this is like I think 15 minutes or 1 hour. This is the previous day. You can see it's outlined here, and this is the current day. 8:30 move, price took out this liquidity, but on the previous day there's still unprotected low there. There is still what, another fair value gap. This is the previous day fair value gap, and this is the previous day low. So if you understand the power of three, or the daily AMD or the weekly AMD, you know what price does every day. For price to go upward, it needs to come downward first to take liquidity, and this is what price did here on the 8:30 fake move, no doubt. But price needs to go for a higher time frame liquidity. Looking at this is just a mere liquidity because this is nothing on the higher time frame. And on that particular video where I talked about things to do or things to check on a new day before trading, you know that you're not supposed to buy above a fair value gap or above a low. If you buy here, there's a fair value gap here, there's a low here, that means you become the liquidity. If you cannot identify the correct liquidity, you become what? The liquidity. So what price was supposed to do, it doesn't matter the time, it doesn't matter if it's 8:30 or 9:30, price was supposed to come for this low. Only patience, only patience. If you wear enough patience, you can wait for this, because this happened exactly around 1 p.m. So throughout 8:30, 9:30, 10, 11, there was nothing to trade. If you wanted to pick this move, you would have been taken out. This is now the original move that you can buy. Going there on the lower time frame, there will certainly be entry there for you. Let's look at another example. I don't know if you're getting what I'm trying to say. Okay, looking at this example, we have the new day opening here, and we have from 6 o'clock, price drop this high. We also have 8 o'clock, 8:30. You can see 8:30, and this is 9:30 candle. So for the price and time theory, for those of you who do these things, see, technical analysis is not that hard. It's not complicated the way you make it to be. Just identify the liquidity, or you become the liquidity. That's it. Simple as that. Now, identifying the liquidity might take a lot of time to practice, but you need to pay attention to the higher time frame. When you figure out where the higher time frame is going to, you just go to the lower time frame and pick entries. So 8:30 fake move or 9:30 fake move, we did what? We took out a high. Now, in this case, we are supposed to what? Sell, because according to you, 8:30 fake move, we sell. Price does a fake move, taking out a high, then we go the opposite. That's what Yes, that's what the price and time theory is. But what is the higher time frame of this price action telling us? You've not checked anything. You're just here on the 5 minute time frame. You don't know anything about the 1 hour time frame, the 15-minute time frame, or the daily time frame. Is it supposed to go down? Is it supposed to go up? What is the bias? Okay, let's go to the 1 minute and see if we could pick any trade there. All right, this is the 1 minute. Price around 8:30. Price took out that liquidity. Then we have a small OT here with a very tiny fair value gap. That there being an entry, and price consolidating just around the entry. Then that 9:30 move, we have another fake move to the upside before coming downward. At this point, you are the best trader in the world. At this point, you're sharing your PNLs, you're sharing your profits, you're posting your charts on Twitter, on communities, on WhatsApp, and so on and so forth. At this point, you know what you're doing, because price and time theory, price faked to the upside, and you saw an entry pattern to trade to the downside. And let's assume this low was supposed to be your take profit. And at this point, you're sharing your chart, you're sharing your profit, not paying attention to what price is doing. Just seconds after that or minutes after that, you get taken out. But this is price and time theory. Why is it not working? Yes, it's not going to work because you don't have a bias. Look at this. The bias is supposed to be what? Bullish. And you went on selling just because of price and time theory. You are fixated only on the price and time theory. You need more than price and time theory for confluence. You need more than that. So you need to understand the higher time frame narrative. This is the mistake you do. I don't want you to do this mistake anymore. Stop losing money unnecessarily. Okay, let's look at the higher time frame. Now, this is the 1 hour time frame view of that price action, and this was the particular place where you would have sold 6 a.m., 7, 8, and 9. So you can see that 9:30, that 8:30 fake move, taking out this high, and you're selling. The price just kept on buying. Why? You are selling above fair value gap. This previous day fair value gap. Price is attracted to that liquidity, but you're selling just below there. Sorry, you're selling below there. This is the previous day price action, don't get me wrong, and this is the current day price action we're talking about. What trade should you have picked? You want to pick a trade that will take you straight to that fair value gap, not a trade that will oppose you from that fair value gap. Understand your bias, understand where price is going to, then you can pick entries. Simple. We have intraday fair value gap here. You can see that fair value gap there. Price dropped into that fair value gap during that 7 o'clock, 8 o'clock New York session. Price dropped into that fair value gap, and that is your entry. That is your trade there. But we were looking at the price and time theory. We're looking at the opposite just because of you want the fake move to do what you expect. You are trading what you want. You're not trading what price is telling you. That's one of your big mistakes. We also have another intraday fair value gap here where price trades into it and still buys. So this is supposed to be your trade. This. Look at the 50-minute time frame. Previous day, 1 hour fair value gap. You want to pick trades to take you to this previous day fair value gap, not trades that oppose you. See that fake move? See that short-term high? Price took out that short-term high, and for some minutes you were in profit. At that time you were, having this euphoria, but you were not certain where price was going to because you traded what you want, not what you saw. This trade into this 1 hour fair value gap is your trade entry. This other trade into this 1 hour fair value gap is also your trade entry to this high. The next day is likely to continue higher because the bias was bullish. Look into these things. Don't take my word for it. Go and study these things. Okay, go and study these things. Let's look at another example, probably our last. Okay, this is the beginning of the new day, 12 o'clock a.m. This 12 o'clock a.m. is Asian session, but that's New York midnight. Okay, so there's nothing to trade on Asian session. Very cold, and London session opened 2 a.m. and did all of this. So looking at this price action, you want to be buying, right? Yes. Why I'm saying these things is because I was once there. Just I cannot tell exactly when, but I was once trading like this, and this was a very big mistake because it cost me a lot of money. And I know people are still out there who are doing this thing. That's why I want to reach out to you to stop doing it. Look at it the correct way. I was once an ICT trader who learned just few episodes from ICT 222 mentorship. That is episode 1 to 5. Talks about price and time theory. So I went to my chart, wait for 8:30 or 9:30 to give me a fake move, taking out liquidity. Then I will look forward to going opposite. Okay, so now we have this short-term low. 8:30, 9:30, price takes out that low. At this point, the trader I was before will be looking for a trade entry there to go opposite. Yes, this is me, and this killed me a lot. I mean, it cost me too much money. I lost too many prop firms doing this. That's why I'm telling you not to do it, not to do this, because I found a better way to look at price. That's the higher time frame narrative, the bias, the drawn liquidity, and all stuffs. 1 minute time frame, you're looking for what? A confirmation. So price treats into that, and at this point, I'm having that euphoria. This killed my psychology because at this point it'd be like too much losses, and like, let me steal profit and go. Let me just take this profit and go. I've gotten at least not even up to 1 hour, but you feel like let me take that profit and go. It happens to me when I had almost 2 weeks losing streak. The first profit I'll get, this is what happens to you. This is the reality. After a long-term losing streak, the first profit you get, you will not be able to hold that trade. You want to steal that trade because for a very long time you've not seen profit. You want to steal that profit and just run away to at least balance that emotions in you that is rising. Okay, so this is one thing I want to do. But some people just want to get, want to get 8 hour to 10 hour and so on and so forth because you don't know what you're doing. So 8:30, 9:30 price thrust into this low, which is exactly the fake move, and you want to pick a trade to do what? To long, right? Okay, so let's say that. How did it go for you? Wrong. I know some people be feeling this particular move is the fake move, but that is not even giving you any confirmation to sell. What you do is for the price and time theory, you want to find a low that is very obvious, then wait for the fake move to take that, and you look for confirmation to go the opposite. But what happens at the end of the day? You just end up losing that trade because you are on the wrong side of the market. Price and time theory, I know it's very common now with many traders. Even SMC traders now are even applying it to their course and so on and so forth and stuff like that. But if you don't understand the higher time frame narrative, you don't understand liquidity, ICT bias, trust me, don't listen to any thing anybody has to say. Don't watch any video that says you can trade without bias. Don't read any thread, any Twitter thread that says you can trade without bias. Don't even pay attention to it. It's all a trap. It's a marketing strategy. If you don't have a bias before going into a trade, then you're probably doing it wrong. Let's see what happened that day that price just failed. Okay, so this is the higher time frame narrative. This is the 1 hour narrative. Looking at this was the beginning of that day. We have a void here, which is the new week opening gap. Draw that to the right hand side. You want price to trade into that void, probably covering it all. So you buying here, you're just buying above a drawn liquidity. This is a magnet. Price needs to cover this out. You become the liquidity because price will take you out to reach for that liquidity. It doesn't care about how much you're putting in that trade. 15-minute time frame view. You can see this. Draw out that new week opening gap. You have all of this. Price trades into that level and you are buying here. So without this higher time frame narrative, without this higher time frame analysis or higher time frame structure or whatever, how are you supposed to know where price is coming from and where price is going to? Because you are just fixated on that 8:30 and 9:30 move, that fake move. You're just fixated on that only. Now on the 15-minute time frame, this is what I'm supposed to. This is the trade I will take. The intraday fair value gap. I want price to trade into that fair value gap, and that is my trade. I'm punching a lot of dollars there, punching a lot of buttons there to trade price into this void. But I'm telling you that the kind of trader I was before, I would be buying in that level without no confluence, just the price and time theory. Okay, so these are common mistakes a lot of traders do, and that's why they fail a lot. They fail a lot of challenges. You know, there are not so many ICT traders out there. Some of them just after a few months of trading ICT, they go on and start bashing the strategy and all of that. They're the one making it complicated for yourself because the videos are long, his lectures are long, yeah, the episodes are long also. That's why you just want to pick the easy stuff and run away with it, thinking you can do the rest just with what you have. No, you need to have a higher time frame narrative. Now do this before or when a new day opens. Look at the 1 hour time frame. Look at the previous 2 days or that particular week. Look at what price is doing on the 1 hour time frame and on the 15-minute time frame. Look at what the previous day did. Don't just close your chart exactly 8:30 when your alarm rings or when your bell rings. You open your system and look for a fake move to trade. Yes, fake move works, but if it doesn't correlate with the bias, it's not work for you. I had my win rate at that time was about 31%. Yes, when I was just trading fake move and all without understanding bias, my win rate was just 30%. And with 30% win rate, trust me, you can't go anywhere because I'll have up to 7 losing streaks, 10 losing streaks, and all. Even my one trade that time, I could not get a good risk to reward ratio, so my one trade could not even cover 2 losses. So these are mistakes that many traders do. I am just here to point you to the right direction, not to do that. That was where I was before. Okay, so I'm going to make a lecture of ICT multi-time frame analysis. Yes, I promise in that lecture ICT multi-time frame analysis and ICT swing trade strategy. If you are a student or you have a tight schedule and you just want to come one day in a week and pick a good trade that will last you for the whole week, then you want to subscribe because when I drop that lecture, it's going to be a bomber. Okay, so if you find this video insightful, like the video once again and drop a nice comment. Also subscribe for and turn on the bell notification for other videos. Okay.